need to grow a thriving business. Commonwealth, go where you grow. Visit Commonwealth.com to learn more. We are in the thick of earnings season. We had the U.S. banks last week, a lot of the European banks reporting numbers this week. And when we want to talk Euro banks, we talked to John Tice. He's been covering the European banking sector for decades. He joined us. He's Bloomberg Intelligence Senior Banks Analyst. So, John, thanks so much for joining us here. I want to talk about Deutsche Bank. It looks like, their bigger business, which is their trading business, their FIC business, did actually pretty well. It was just kind of the bankers didn't have a lot of stuff to do during the quarter.
Yeah, hi Paul. Completely agree. FIC, as expected, has beaten expectations pretty much across the board. And actually, if you look at Barclays today, up 63% in dollar terms, so comfortably better than Deutsche. But yes, the advisory, very disappointing. And as you all know from your many years in the investment banking world, what pays bonuses? It's the investment banking fee, and Deutsche was down 85%. So the market's clearly looking at results through a bear market lens at the moment. Pretty difficult to catch a break, even if look at Standard Chartered or SEB or something today, down 4-5%, even with massive revenue upgrades, purely because the market's worried about bad debt, it's worried about cost inflation.
That 85% slump in investment banking revenue, just the worst of any of the large Wall Street firms. And John, what is the light at the end of the tunnel for Deutsche Bank? Because Paul and I were talking about how it's a shadow of its former self. How does it get there? Or is that such a lofty goal at this point that it's not even on the radar?
Well, I think that you're used to looking at American banks because think HSBC. HSBC was one of the sort of global leading banks. Yep. It's trading at a 20% discount to Europe now. It's trading on 5 times next year's earnings with massive revenue upgrades. Deutsche Bank's actually more expensive on PE. So when you say light at the end of the tunnel, clearly the one thing they've been waiting for is revenue to recover. And the NII side of it, the fixed income side of it's improved. We know that fees, advisory, origination is quite cyclical. Last year it was huge. This year it's down a lot. But I guess the light at the end of the tunnel is getting through the next 2 to 3 years of economic pain in Germany, because don't forget they've got a very large corporate loan book there as well. Yep. And Germany is at the epicenter of all the issues you've got with Ukraine, Russia, the gas issues. So we're still working our way through that.
Yeah, John, I don't think that, our listeners here in the States have a full appreciation of how difficult the economic conditions are in much of Europe for a variety of reasons. So as you assess the European banks, how are you thinking about credit quality and write-offs? And how much of a headwind is that going to be, do you think?
Well, the funny thing is it's not just about being a headwind at the moment, because banks have become so much more profitable purely mechanically because rates have gone up. You've got the ECB and the Bank of England beginning to think, hang on a sec, you guys are now reporting double-digit ROEs simply on the back of us having to raise rates. So how do we crimp that? The banks are thinking, you know what, let's get ahead of the curve. The IFRS 9 is the accounting standard, a bit boring but quite important. They're taking more reserves and setting aside more provisions, and they will do more in the fourth quarter to get ahead of this, and also to damp reported profits. They don't want the regulators saying, right, we're going to put a cap on bonuses, we want to put a cap on capital returns. So it's an interesting trade-off, a bit like you saw the US banks being told, well, let's just calm down on the buybacks. The same is coming in Europe, but more of a revenue question.
Okay, a lot of gloom and doom in this conversation so far. Let's get some good news in here. If we look at Barclays results, on a dollar basis, a U.S. dollar basis, you did have FIC up 63%, equities fell 21%. But let's talk about FIC. That seems like an undeniable bright spot.
It was, and Barclays has been investing very heavily, and obviously the dollar going the way it has really flattered that. But I'd point to the share prices down. And what did the call focus on? The call focused on the underlying outlook for credit and the UK and credit impairments, and pointed to things like in the US, their credit card book, early warnings, so 30-day delinquencies are beginning to rise quite quickly. So the market is looking through all of the good news on the top line and focusing on, are you doing a good enough job on costs, which Barclays is at the moment, and are you setting aside enough, and are you being realistic about where the bad debt goes? So yes, optically a good number, but when you look at what the market's focusing on, unfortunately, it looks straight through that.
So, Jonathan, as we all globally deal with, slowing economy, let us step back, and I'd love to get your view on kind of the structure of the European banking market. Will there be any change going forward? Any M&A? I know the cross-border M&A is, very difficult to do. How do you think the European banking sector may evolve just structurally going forward?
Well, consolidation cross-border is needed, but we're still a long way from that. I mean, if you think the most difficult thing the ECB is debating at the moment isn't the 75 basis point rate hike, which they almost certainly will do, it's what do you do with the 2 trillion euros of loans that you made to the banks during the crisis? Because at the moment, they're now making money for the banks hand over fist. And if you're Italy, the Italian banking sector needs that. If you're Deutsche Bank or if you're BNP and you've got hundreds of billions of these loans, you're being given free money, but the ECB has to make a change. And so, as with the sovereign crisis, it's faced with the what do we do about Italy, where there's still a lot of risk, and stop the largest banks just being given free money. So I think consolidation cross-border is still a long way away. The likes of BNP will be at the forefront of it, but it's still going to be more piecemeal, and I suspect we've got more domestic M&A over the next year or two. Particularly is, would you buy a bank right now, even on a depressed multiple, if you know that bad debt's going to go up and you don't know how much? The answer's no.
And John, before we let you go, I am curious to hear, in your opinion, how much reorganization we should expect to see in the next couple of months. I mean, to pick on Deutsche Bank a little bit more, there's been a lot of shuffling around there. Have we seen most of it, or do you think there's more to come as we head into these hard winter months?
Well, I mean, difficult to say with Deutsche, but obviously we've got Credit Suisse in the next day or two. I mean, that's the interesting one.
We get a reorg tomorrow, right?
The question is...
All right, we'll be on standby for us tomorrow, John.
have they raised enough money to avoid a capital raise? And the other issue they'll have is it's one thing making cost promises, but in an environment where you've got so little visibility on revenue and clients are probably shying away, how do you present a credible plan? So Deutsche, where it was 3 years ago, Credit Suisse is at the moment.
That's good stuff. I remember those Deutsche Bank days. And again, tomorrow, I guess, is when we get the plan from Credit Suisse. So
there we go.
Again, another plan. Jonathan Tice, he's our senior banks analyst, covers all the European, a lot of the global banks. He's based in London, and he does a great job. So we always appreciate getting a few minutes of his time there at Bloomberg Intelligence. So again, some pretty decent numbers from some of the European banks, but again, it all comes down, as it does for a lot of industries, particularly this quarter, on their guidance. And I think their guidance is cautious at best. I'm not even going to say cautiously optimistic. They got some challenging economic times ahead, particularly in Europe, exacerbated in large part by the war in Ukraine. So we'll stay on top of all those European banks. More coming up. This is Bloomberg.
Hey, you're listening to Bloomberg 960. Thanks, Paul. I'm John Tucker. Let's get a look at the roads, traffic, and weather. Do that every 15 minutes. Larry Olson has the update on your ride this morning. Hello, Larry.
Hi, John. This report brought to us by Indeed.com. Still have this double trouble situation going on at Morgan Hill, north 101 at Cochrane. 2-car accident, center divider. They're waiting for some tow trucks northbound 101 at Coyote Creek. There's a stalled-out car in a narrow center divider there, and it's got things slow basically through Morgan Hill on northbound 101. At the Bay Bridge Toll Plaza, we are currently sold out. Lights are on, jammed all the way back into the maze. Getting to the Richmond-San Rafael Bridge, 5 West, pretty thick from cutting out to the span. Fall into hiring spree with Indeed. Their end-to-end hiring solution makes it easy to attract, interview, hire candidates, sponsor a job, and instantly receive a short list of quality candidates whose resumes on Indeed match your job description. Visit Indeed.com/credit. For the Bay Area's best track, Larry Olson, Bloomberg 916 103.7 FM HD2. John.
All right, thanks, Larry. Let's get your 3-day weather forecast in the Weather Center this morning. That is where we find Gary Best. Morning, Gary.
All right, good morning to you, John. It looks like we've got some high, thin clouds over the area right now, but that won't bother us at all. We'll have sunshine and scattered clouds right on through today. Breezy, temperatures up between 60 and 70 during this afternoon. Tonight, mainly clear skies and cool, and around 40 for the North Bay, and about 50 in downtown San Francisco. Sunshine for tomorrow between 65 and 75 along the coast, and 70 to 75 for the inland. And we are looking at more sunshine coming up on Friday as well, between 60 and 70 from the North Bay and coast to the inland locations. Looks like nice weather will be with us this Saturday and Sunday. This is Gary Best. on Bloomberg 960 and 103.7 FM HD2. John.
I gotta learn how to turn off my microphone, Garrett, when I'm doing that. We 50 degrees right now and clear skies in San Francisco. Among some of the stories we're following locally, Governor Newsom slamming Valero's latest blowout profits. He's accusing the company of jacking up profits while ripping off consumers. Newsom saying in a statement that big oil is ripping off Californians